Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 18th of December, 2023. And the time right now, where are we? We're at 6:10 p.m. Central Time. So, people leaving like mad for the Christmas holiday. I have to wish you all a Merry Christmas. I'll be here. But I can see it already. The trade has changed. The volumes are exceptionally light. Markets sit sometimes. They move in a little bit of bursts. Today, I thought that you would even get up stronger than you did in the energies when I saw the Red Sea as being, if you will, all traffic diverted from it, be it tankers and cargo ships. They're basically not willing to go through them anymore. It was a question of when insurance costs were going to soar. And that's what's done it. I am sure of that. And now what's happened is there's a coalition that's been in existence between the U.S., the U.K., France, Spain, Italy, the Seychelles Islands. I think Qatar might be in it. There's a few in there. And they're going to meet tomorrow. It's good that our Secretary of Defense is actually in Israel. And they can meet virtually and decide how they're going to handle this problem. I know what I would do, but I'm a super hawk. I would certainly warn everybody that, hey, we've been playing the defensive posture. We've been good with you. It's time to stop. The next time drones come, we can see it. We see where they're launching from. We will destroy that area. Areas. Just keep going, all right? Again, they are attacking people, ships that have nothing to do with Israel. They don't get to say that every ship that goes through there is dealing with Israel. I understand their hate for Israel and what they're doing and the message they're sending. The message has gotten too broad. So if they want to be slapped around, it's Yemen, guys. This is an easy target. Nobody's going to be upset. You put together your coalition. And you just tell the people don't do it, and maybe they'll stop. Okay. You did get a little bit of a bid in the bonds and notes. Market was all over the board today on that news. Didn't really go anywhere one way or the other. I want to remind you on my dollar index report. Let's bring it up right now and talk about this report. You won't have this report tomorrow, so it goes off. I don't know the time tomorrow on Tuesday, but it goes off. I put it up for 3 business days, Thursday, Friday, today. The 4th day it goes off. It's all commentary with charts. I will bring you into the seasonals. Now, we're going to look at the 30, the 15, and the 5-year seasonal. I like the 5 a lot in this one for this reason. It deals with COVID, the peak, the comeback down, what it did. But then I want to see, obviously, what typically happens in December and January to the dollar, because there are seasonal factors that are always at play in different markets. Then we're going to move on and talk about world events, and then we're going to look at the weekly charts, rip them apart. Daily, put them all together. And then we're going to go to price counts, because they've already been established. Where could this dollar be headed? And I think you'll be surprised. So how do you get to the report? You can either move your cursor, if you're on a PC, to the top up here. You can go to our website, iraepstein.com. Got it? iraepstein.com. In research. Look at the top right. You'll see research, not education. Research, it'll be there. After tomorrow, game's over. You can always call my staff tomorrow. They'll help you. But again, I don't know what time it comes off. The computer picks a time somehow, and it takes it all off. All right. So are we going to get a correction in the stock market at all before we get to the holiday? When is the Santa Claus rally? Whoa. Let me give you how I learned about it. Yale Hirsch, who developed this theory, the seasonal, as I like to call it, of Stock Trader Almanac, used to come on my TV show called Stocks, Options, and Futures. Before there was CNBC, there was a network called the Financial News Network. And they were the big national network. And NBC, cable NBC, that's what CNBC stands for, bought them. I was one of the biggest shows on it nationally. We had a show that I think it was on Wednesdays at 12 o'clock. People would call in from all over the country. I had a full audience, like an Oprah show. And we would bring in big celebrities from the stock market and the futures market. And it was everybody. Yale Hirsch was one of them because he had developed the Stock Trader's Almanac, and we talk about that. But it was the Bob Prechters, who, if you understand Elliott Wave, he's one of the big ones. Joe Granville was on a bunch of times. He was on Balance Volume. John Bollinger, a regular, that would be, I think he was on 5 or 6 times over the years. The show went a long time. And we couldn't handle, it was all call-in. Remember, the internet was a whole different world then. It was all call-in, and we just had banks of people picking up phone, taking questions sometimes, but mostly they wanted the free offerings we were doing, and that's how I built my business. But the beauty is I got to talk to these people, and I learned about it. Well, simply put, what Yale told me was it was the 5 days before Christmas and the first 2 trading days of the new year. That is your Santa Claus rally. Well, we're in it. You entered it today, or I would say maybe Friday, but today. So could we get a pullback? Sure, you could, but you're in that rally time frame that goes into January. So you're going to come back and there's more. Nobody said it goes straight up, but it should end up a positive time frame for the market. That is the theory. Again, I'm going to explain. It's called theory. Does it have to happen? No. Does it often happen? Yes. It's called window dressing in the market, and he understood that because what brokers do is they dress their portfolios in a certain way. At the end of the year, they take certain things out. They want certain things in. They want it to look a certain way and balanced a certain way for a myriad of reasons. Okay. When you take a look at the S&P, I mean, what can I tell you? It's been straight up. It's a very difficult market for anybody to just come in and buy this market on this rally without a correction. And you haven't really had a correction. You had a pause 2 weeks ago, and you went back up just now. So again, the pattern is higher lows, higher highs. Now the pause happened this week. Let me take you to it. The week of December 15th, you had a week that had an inside week. Might have even made a lower low that week. Then you came back up right now, as you can see, as to where you're at, okay? I keep saying week. These are days. Days. I don't know why I'm on weekly. Days. I was just doing stuff on weeklies. So if you take out that number, that could give you the sign finally that you're breaking the pattern of higher lows, higher highs for a short period of time. Could it carry the market down all the way to 46.74? I have my doubts about that, just because it's the Santa Claus time frame. But would I tell a client to just buy at the Bollinger Band and just going to hold on to it and keep going? I want to answer the question. I would never do that. That does not mean it can't do it. I would never do that. It's not a high probability trade. What is high probability is buying the breaks in the market until the red line closes under 79 on the slow stochastic. That number's at 93. It just tells me on pullbacks, and there's a way to look at the market on the pullbacks. I teach it in my enhanced Bollinger Band course, IraEpstein.com under education. It's there for you to take. And it teaches you how to do it, the technique with it. Okay, so I am bullish. I'm still committed to the bull side. Santa Claus has left the building. He's out there, and we'll see if it can work. What about going with the NASDAQ? Same thing. Now, the NASDAQ is trying to move to the right-hand side. Where did it finish today? Today's settlement was at 16,939, and the Bollinger Band was 16,914. So you were over it here. The week before, let me come here the right way if I can point my finger. That's week 2, 3, 4, 5 weeks over. You're rarely 5 days over. I don't know why I'm stuck on the weekly. I am. It's my fault. 5 days over, and here you had closed over it. So you're 6 days. Folks, go count on charts. I want to tell you how rare 6 is. So Up day Monday, the odds favor a Tuesday reversal. It's another saying in the market that goes out of the Stock Trader's Almanac, by the way, which I read cover to cover and learned things. And I read Jesse Livermore's books, all these people. You got to go back and read the pros' books because you'll say it doesn't apply. Nonsense. Nonsense. It applies. The theories apply. You can run math on them today to prove them. We have computers that can go back. In the old days, you were just going, well, he said it. It's got to be the way that it is. Now you can go back and prove some of these theories, and they are high probability. I'll give you an example. This weekend, I recorded more chapters for my new charting course, and I went into sayings that people have, the 50% rule, the 90% rule. Why is the market up typically on a Friday? I had one of you write me about that. And I went, and that's what got me going on this whole thing. So I went and I found all the rules. I had to spend over the weekend 4 hours or so doing this. And I'm finding all the rules, and I listed them. I have the sources for them. It'll be in the course. The links that'll take you right to where they're at, how they came about. And there's papers on each one. So I think you'll enjoy some of these things. I love teaching, and it's one of those areas that you go with. So you can see, you have your embedded reading. Bullish. I mean, breaks are to be bought still. Bullish. Embedded reading. I don't have to see anything else. Tells me that I want you to be a buyer on breaks, and I cover that in my morning subscriber videos, how to do it. Now, the one that is still the weakest remains the Russell. It had a few days up and over the Bollinger Band, but it pulled back easy. And any down move of size can scare this market tomorrow. You're only down 3 points, but if you were down 25, you could easily lose the embedded reading and get a bigger correction than you think. What did happen, and properly, is you had a bullish crossover here where the 18-day got over the 200, the 100, right here, and the market sprung. It did its thing. So it doesn't owe more than that at this point in time. Something else going on in those markets. The higher they're going, the banks and market analysts are all raising their projections for 2024. It's like the sky's the limit. I think the higher you go now, the less you go possibly next year. So I'd be a bit cautious. You're pricing an awful lot in on the PE basis in these markets. And PE, price earnings, matters. All right. Still in a bull trend here, sideways action. I like that the market moved to the right-hand side. It is embedded. It is still bullish as far as I'm concerned. Not the case here in the 5-year. Be careful. Now, the sweet spot. Did you read Bloomberg over the weekend? You should. Their article was, where's the sweet spot in the curve yield? And they're claiming that the analysts think it's the 2-year, and that's where they should be putting their money because the inversions are going to go away. We're going to get back to normal, where the back end's got to carry a much bigger premium than the front end, as it normally does, because you want to be paid for time, risk, and so on. That will happen over time. Markets do go back to normal, okay? But I'm a little concerned here. If you stay and you lose this under 79, you can get a pullback here of some size. I'd be I'd be careful with it. Nauseous is a good word if I were a bull and you gave up that much. Dollar index, I'll let my report cover that. In the euro, well, we still have a market with lower highs, lower lows, but it is holding and staying over the 18-day average. So the bias is up. You're there, sort of just hanging in. Look for volume to get smaller and smaller. Now, we do have tomorrow 2 events in currency. We have the Bank of Japan coming out with their monetary policy, and we get the notes from the Reserve Bank of Australia. So I want to see both of those. They'll be fairly important. We have no trend in the pound. You came off the challenge here of the 200-week and the 100-week average zone, went to the Bollinger Band and right back to the 18-day average. It's just a whipsaw market back and forth. In Bitcoin, I'm not surprised to see the market pull all the way back. When it was up here, I was on every day. The videos are there. And I told my clients they got to take their positions down by 3/4. We were talking back here. And I said, now you got to just hold on blindly. waiting to see for January 10th, does the SEC approve or not approve? And if you don't have a stomach for that, then you don't belong in this trade. It has nothing to do with charts. I'm going to stay with what I said. Brent WTI. Well, as soon as I woke up this morning and saw that the Red Sea traffic had been diverted, game over. I knew that there was a question of, excuse me, how much was crude going to be up? And it was up nicely early on. But it rallied and it ran into a buzzsaw right through here, the 200-day average. The 100's up here. The 200's right here. Couldn't get beyond that. So it's been a bear market rally. It's trying to stay over the 18-day average. It's corrected an oversold condition, but now that the numbers are above 30, it's not there anymore. Can it lift itself here or not? That's going to be the important question. And if it ain't going, then you're probably not going here. It's not a market that's any longer in the bear camp, but it's not joined the bull camps just yet. Same thing happened in heating oil, natural gas, gasoline. Everything got a bid. You've lost the bearish embedded reading. What do you do when you lose a bearish embedded reading? If you've taken my enhanced course, again, iraepstein.com, education, here's where you lost it. Before the market goes for these lows again, I think it'll go wherever that 18-day average of closes is. And let's get over there and see if we're making our run. We're trying. We'll see if it can do it. Not complete yet, but I think that's how it'll play out. So that's what I'm thinking you're doing. I'm going to be writing less and less all week. It's time to start sitting back. You don't do a lot of research right now. You start enjoying the holiday spirit. You don't want to get yourself in a lot of positions. Christmas is a world holiday, not a U.S. holiday. So everybody everywhere winds trading down. Remember that. And when New Year's comes, another world holiday, and then it's over. Then we're back in waiting for what? Valentine's Day. Not a world holiday. All right. My wife thinks it is. I will talk to you all later. You have yourself a good evening. See you in the morning.